stock markets have been turbulent, of course, but seems to be coming back on track. A whole confluence of factors that we continue to track for you. At such a time, how can you smartly invest in the stock markets and have a balanced portfolio to earn decent returns? To know the right strategy, keep sending in your questions to us at the number on your screen, and we'll answer a select few on TV and online every Wednesday. Our global business editor, Udayan Mukherjee, joining us now to take those queries with you. Let's start off with our first query today. And this one is coming in from Saurabh Sharma in Pune. Listen in.
Hello Udayan, I am Saurabh Sharma from Pune. I have 100 shares of Piramal at rupees 2500. Please advise what I should do next.
Well, you bought at a higher price and the stock has corrected quite a bit. And part of the reason, of course, is some of the disclosures which came in after the Q4 on their balance sheet did not go down very well with the market. But, the peak was nearly 3,000 for Piramal, if I remember correctly. You bought at 2,500 and the stock is now languishing around 1,800. I see Piramal as a WIP stock, work in progress. It's very difficult to make a firm assessment of how to value this company today because it has two core businesses. One, of course, is the old pharmaceutical business, and the other is the relatively new business of them having acquired DHFL, the erstwhile Diwan Housing, and now trying to leverage on that housing finance business, the mortgage business, to make it a far bigger retail vehicle for the finance side of it. So we'll need a couple of years. We'll have to give them a couple of years to see where they can take their finance business and whether they can make that transition from a housing finance company to a more holistic retail financing company, because that will drive the valuation for Piramal going forward. The pharmaceutical business, the CDMO business, is a stable growth business. I think you can continue to get about 15% kind of growth in that business. But it's on the margin, it's the finance business of DHFL, and what Piramal manages to do with it is what is going to drive the share price. But in the near term, I think you'll have to be patient. You're sitting on a fairly significant loss of 25%. I don't know whether it makes sense to sell it off, but don't expect this stock to be a rocket in the near future. I think it will have to prove its mettle on the retail front, and that will take at least the next 2 to 3 years. Before that, I don't see you making very substantial gains.
All right, Ashok Kumar from Noida also has a query. Let's listen in to which stock he's tracking.
Sir, I am having 273 shares of SCL, which I purchased at the rate of rupees 1100. Now please advise me how to proceed. Shall I quit or continue? As on date, the share value is below the purchase price. Thank you.
It's a difficult one on HCL Tech. I don't know. I am not here to give you a buy or sell recommendation at all. But I think it probably makes sense to switch from HCL Tech to the sector leaders. If you want to be in the top 4, which HCL Tech is, then probably Infosys or TCS make for better bets, because their valuations too have corrected, maybe not as much as HCL Tech, but in a relative sense, I think there is more stability and predictability in those frontline names. Even in the quarter gone by, the reason why the stock has come down below 1,000 rupees is the EBIT margins for HCL Tech were not great, and they've given guidance of 18 to 20% EBIT margin, but the margin came in at 17%. And looking at that margin profile, I suspect that while they may get 12-14% kind of sales growth in FY23-24, I don't think they'll be able to report earnings growth for more than 10 or 12%. So for a 10-12% earnings growth, do you want to pay a 16-17 PE multiple? Or are you better off seeking the stability of Infosys or TCS? My suggestion would be, if you get rallies in HCL Tech which takes it close to your purchase price, it may not be a bad idea to consider switching to the big two, either TCS or Infosys.
All right, Pinakin Patel now from Surat, and let's take a look at his query. I think it's on IGL this time.
Hello sir, I have a 150 numbers of Indraprasth Gas IGL. Should I have hold, add more, or sell it? Because since last 3 years there is no movement in IGL. And what is the future of gas sector?
Well, there's a reason why the stock is consolidating over the last 4 or 5 months between that 350-400 zone. Because there are some defensive characteristics to IGL. I mean, for example, it's not an expensive company. I mean, for a 20% plus ROE company with no debt on its balance sheet, you're getting it at 14p or thereabouts. So valuations are in IGL's favor, which is why the stock has not collapsed below 300, 350, though it's come off a lot from that high of 600 which it hit last year. But the reasons which are worrying most market participants about IGL is that what is the future of the CNG business in the light of the kind of prospects people are seeing for electric vehicles. For example, the Delhi government is already saying that they will put EV buses on priority compared to CNG buses. This is clouding the future for growth for a company like IGL. I mean, even if you look at its core non-transportation CNG business, the Delhi government again is saying that we will net for a portion of it, we will now have open access and let other players come in. So that challenges the dominance of IGL in the core CNG business as well. And on the other hand, LNG prices have been going up and that squeezes margins. So I think the directional challenge is what happens to CNG post-electric vehicles and whether this is the right time to be buying a company like IGL, or is it a sunset kind of a sector, which is the fear which a lot of investors have. So keeping all this in mind, I think you may be better off considering some kind of a switch to a sector which less clouded prospects, should I put it like that, because I think this issue will continue to dog IGL in the years to come.
Saurabh Makkar has also written in from Gurugram. He's looking at Zydus Life Sciences.
Hi Udayan, this is Saurabh from Gurgaon. Just wanted your inputs on Zydus Life Sciences and pharma sector in prospects in the short run. I'm holding at levels of 425. Should I book loss or average out or wait for recovery?
Well, I don't think you will get a very large recovery immediately on Zydus. The thing with Zydus is that, which is the erstwhile Cadila Healthcare, as you know, but is that a lot of people were waiting to see if that Zycov-D trigger will play out, which is their COVID vaccine. And it looks now like that there is just no demand for COVID vaccines and that trigger is not going to play out. And if you look at the recent results for Cadila Healthcare, of Zydus, same thing, Zydus Life Sciences, the results have not been great. Margins have been under pressure from the US business particularly, and that's not going away anytime soon. The good thing about Zydus is that their balance sheet is good. They've managed to sell their animal healthcare business, so the cash has come in, the balance sheet is debt free, and they're even doing a buyback. So on that front, I think you have less to worry about. The problem is the core business and what are the triggers. So once one looks at triggers, there are a few floating around, but I think you'll probably find better value in the pharmaceutical business elsewhere. So no, it would not be my top of the line, top 3 or 5 picks in the pharmaceutical space. Given that the sector has been underperforming, I think there are probably better value to get elsewhere compared to the name that you own.
All right, and with that, we run out of time on this edition of Ask Udayan. Do continue to send in your queries. Udayan, thank you so much for taking all of those questions this week. We'll be back with more every week here on the show.
If you like the video, do like, comment, share and subscribe.